at Angel One joining us on the show right now. Hi Aamar, good morning, and it's the start of the new series on F&O, and this is going to be yet again interesting one because a lot of these triggers are lined up when it comes to the fundamental aspect, be it GST rate rationalization. A lot of these macro data is also something that we will be watching out for. But what is your expectation from the series, Aamar? Because if I look at the past trend, then in 3 of the 4 times, September series has turned out to be good for the markets.
I would say that, markets are definitely waiting and anticipating how these triggers really work out. And these are big triggers, speaking about that. Secondly, the tariffs which have been imposed on India, there are some views that maybe this is more of a tough to handle, but it will be more or less resolved in a couple of months. So maybe we'll have to bear it out for a couple of months. Some sectors definitely they are impacted. They will be impacted. But how does it benefit India overall? That's something is of concern. The one concern which I see is that FII selling, that is overall, if you start from the year, that has been there. So how once that also reverses, that's something going to be very positive, because see, domestic flows have been strong. If you look at the mutual funds, SIPs, and the mutual fund flows, that has been phenomenal. So that clearly shows that the inherent strength in the economy and the money flow that is there is definitely there. But still, these concerns are there. The other good aspects are we've got in terms of monsoons. That's also fair enough. Inflation is under control. Rate cut has been there. RBI has clearly stated as recent as this week that they'll take whatever steps are required. So these are positive triggers. We'll have to see how they play out. Yes, the markets, I would say expiry was also there, and markets were looking at some triggers post the sharp rally. So I see that there could be some consolidation in the market. So the current level, if I look at Nifty, that would be somewhere around 24,000, 24,200. That should act as a very strong base. Whereas in the upside, 25,000 is a zone of resistance, 25,000. So it's going to be a 1,000-point rally, because apart from the fundamentals, if I look at the markets from a technical perspective, it really shows that there could be some consolidation before we see an up move. And as you said that out of 3 or 4 September 3 have been good. I would say that we could witness that, provided Nifty doesn't reach the 24,000 odd levels. And then again, we have the festival season and Diwali coming. So there could be some consolidation before we see a major up move.
All right, so markets ready for some consolidation before they start the leg of rally upwards. That's the call coming in from Aamar. But let me also welcome Amit Khuranna on the show right now. He's head of equities at Daulat Capital, joining us on the show. Hi Amit, very good morning and good to be speaking with you. So Amit, off late there has been some bit of a nervousness in the market, seems like, kicking in on the back of the tariff news. But the consensus does believe now that it will be digested well, and the overall impact rather on the GDP is not that a major one. Amit, what are your views? How soon do you believe that the markets will get over that tariff uncertainty and try to factor in what could be likely in store with respect to GST?
Well, they seem to be already over with it, because the 50% kicked in and market did not have much of a reaction in that anticipation. So there's probably a context to this. I think 25 plus 25 was a bit of a negative surprise, but the market is assuming that the top up of 25 is not going to be sustainable, and eventually there will be a breakthrough, and both the governments will get to an understanding. Now the first 25 is, I think, the market real worry. Does that stay at 25, or does that come towards 19, 18 range, which has been the case for most of the competitors countries for our export basket. So I think the second 25, I think market is assuming that it will go off eventually over the next few weeks. But if it doesn't, then it's a real big overhang. And I think it will start kicking in more towards, in terms of impact on the export data, only from November, December, because in this anticipation, there has been an inventory fill, there has been a pre-shipments, and all those kind of things have happened, which a lot of companies have highlighted as well. So the real, I think, time frame will be October, November onwards. But in the interim, I think the markets are taking more confidence from the GST rate rationalization, which will be a big boost for domestic consumption. They are taking a lot of faith from the lower inflation data, and the RBI stands on supporting growth. And therefore, the hope is that the second half of this year will be much better growth numbers, which in a way is also reflecting in our aggregate estimates.
Oh, well, indeed, point taken. But Amit, if I may ask, that GST rate rationalization, because of that, a lot of these sectors have already shown good moves. Case in point being autos, case in point being select staple companies. Where do you believe the opportunity is still there? The headroom for growth from these levels is still there. Well, of course, the GST rate rationalization, the impact on numbers will be seen eventually over the next few months as well. It will start kicking in. But how much of it is already in the price, and any sector do you believe is yet to price in that?
Well, it's a mixed basket. I think it's a very valid question because the entry-level multiples, in spite of the underperformance of a lot of these stocks, are not very attractive. I mean, they were quoting at 65, 70 times earnings multiple, and you certainly had them underperforming, and you're now entering at 50, 55 times sort of ballpark numbers. So I think that's one way to look at it. But the way we are looking at it is slightly different. And let me lay down a context. I think consumption has largely underperformed the capex and the other GDP plays over the last 3 years. 2022, you had the impact of the high inflation and Russia-Ukraine war-related issues. 23 was a bad monsoon, and that impacted rural in particular. 24 was the impact of the election season, and there was really no takeoff in the festival season, even though there was an expectation. So 3 years of underperformance of consumption is not going to go away in a matter of 2 or 3 months, and it's not going to show up in a matter of 3 months or 4 months. I mean, there has been a lot of buzz around the street saying that this festival season should be a bumper number, and all sorts of estimates are doing the rounds. Our perspective is that this is going to be more of a structural bottoming out of consumption. The government policies are clearly aimed at boosting consumption, not just for this particular festival season, but maybe over the next couple of years, because ultimately that's one lever that needs to now fire up to sustain the GDP growth between 6 and 7%. So therefore, while the near-term valuations may look rich, they may look having discounted, but I also believe that if the structural theme plays out the way we are envisaging, I think there will be a significant level of opportunities across staples, across durables, pseudo consumption, building materials for that matter, which will eventually show up, provided the raw material inflation does not play the spoil sport here. I think that's one caveat I would add. But broadly, I think over the next 4 to 6 quarters, we believe consumption is going to be a far deeper thing to back up than the other themes.
Yeah, absolutely. In fact, since we're on the subject of consumption, we're going to be talking about where is it that you can invest in consumption, and should you be, given that valuations